Like I've gone bust twice in my life. I didn't go to zero. I actually went minus something. I don't think if I was a VC, I would have funded a person like me. So I've done all kind of odd jobs. I've worked in a call center.
What kind of DNA do you think you have?
I usually, before doing anything, I make peace with the maximum worst possible outcome.
Yeah, we're waiting for Nitin to join. My personal background, I'm Venkat. I'm the Chief Risk Officer of Jupiter. Mostly been in analytics and all my life, but over the 8 years I spent in UK, the last 2 years was Monzo, where I think I saw the power of community, and I was one of the early members to join, and I found it very interesting. Also, that's the first time I spent a lot of time with engineers and in a fintech world, and so I have tremendous respect in how you can think about moving a financial sector into this MVP model and develop it. And I think community plays a very key role along with technology. So the idea is to bring people like that, interesting people. So this is the first attempt. Given the situation we are in, we thought the web might be the best way to go about doing it. And so the first panelist, without any delay, is someone who has built a platform from scratch. Specifically, if you ask people in the fintech world, is considered one of the finest ones. I think beyond going any further, the first question I would like to ask is, I think you might have answered it many times,
Right.
Is what made you build Zerodha, and where did it start, the genesis? But you might be a little bored of this question, but still, I thought I'll start with that.
No, I used to trade the markets through my life. I started trading when I was like maybe 16. So back in 96, 97 is when I started trading. I blew up in 2001. So I worked in a call center for 3-4 years. I used to the call center because I could trade during daytime and work in the nights. So I did that till 2005. Someone gave me money in 2005 to manage. So I quit my job and started doing that. I also became a franchisee for a bigger brokerage firm in 2005. It's called Reliance Securities. In 2008, when the markets fell, I was short in the market. So made a little bit of money. And my younger brother had joined me by then. What I realized was, I was kind of feeling fatigued. Day trading, very active trading is very stressful. And I was feeling a little burnt out. So I wanted to take a break from trading. And my younger brother had joined, and he was a better trader than I was. So, said, why don't you, continue trading, and I'll give a shot at being a broker that we didn't have as traders. So the journey started in 2010. And it started off trying to cater to very active traders like me. In the sense, it wasn't really meant to be what it is today. It was meant more for a niche community of very active, futures and options traders, day traders, and all of that. And so that's how in 2010 we started on top of all vendor-based platforms. In 2012, so when we started, the whole idea was low cost, transparency, and etc. And it wasn't really about better platforms. But in 2013, the first competitor came around who said the same things that we were trying to say. And so that's when it kind of hit that you have to have some product advantage as well. And that's I got very lucky with Kailash, who's our CTO. He joined us in 2013, and around him is where the whole product journey started. 2015, in December 2015, in 2015 we launched our own in-house platform called Kite. In 2015 December, we went zero brokerage for equity investing, and it for the first time in our lives, virality hit the business. And then Demon happened in 2017. With Demon, what happened was people started using Aadhar for onboarding, because the biggest challenge for us as a business right from the start was just to onboard a customer, a 40-page document, PAN card, blah, blah, blah. Right now you could actually instantly onboard. That's been the journey. So I think the three defining points in our business was, one, to start the business itself. Two is getting Kailash on board, our CTO. Three is going zero brokerage for equity investing. And I think actually four, the fourth one is, the demonetization and Aadhar, because without easy onboarding, I don't think we would have been where we are today.
I think given the pandemic and then the lockdown, and it is pretty much brought the pretty much the whole world into standstill. So how do you see this as an event, both the pandemic and the lockdown? How do you see it?
I think personally, I think we're just getting started with because what stock markets have said, I mean, the way markets have fallen around the world, it's factored in a recession, right? So the actual event, how markets behaves is it factors in news before it happens, right? And so I think right now the markets are factored in a 1-2 year recession, and I think 1-2 year is the best case here, right? Um, so yeah, so I think see, luckily for us, we've been able to grow the business until now without raising debt. We don't do any lending business, so there is no credit risk outside as well. So we've been, in this whole niche kind of a business where this event as such hasn't really affected us as of now. Actually speaking, we've opened the maximum number of accounts that we've ever opened in the last 1 month. We have done more trading volumes than we have ever done in the last 1 month, right? So, uh, so no, because the volatility kind of brings in more volumes. But I think this whole fall in the markets has also attracted a lot of 20 to 30-year-olds, first timers to come open new accounts, and maybe the fall in the market is giving them at least a sense of an opportunity to invest at a discounted price. So yeah, so until now for a business like we've been somehow cushioned from all of this whatever is happening. But I think the way this whole usually these market falls work is when the market falls, the first point of the fall is usually the same behavior. A lot of people who had missed out, they'll come open accounts and etc. The first round of volatility is when there is a lot of trading as well. But then once people get used to the idea that okay, it's not going to bounce back, and this is a new way of life, is when usually activity in the markets drop. New money stops coming less. People stop opening new accounts, and all of that happens. So yeah, so we're trying to be prepared for it. The way we are doing it is by I think this whole work from home has been like a great opportunity to kind of improve all the processes. Um, like suddenly the realization has been like, why do we need so many people? Because we automated so many things in the last 1 month. It's just quite crazy. I mean, I never knew that we could actually automate whatever we have automated today, especially around onboarding, around automated response to customer queries and all of that, right? So we were forced to do it. I think in India, I think a lot of our founders, if we can throw people at solving problems, we throw people at solving problems. So this whole last 1 month has forced us to kind of go back and look at processes which are not very uh, sexy as such. So these are not something that you look up and say, okay, can we improve this? Or, I mean, otherwise. So yeah, so I think at the end of it, I think whenever all of this lockdown ends, I think the real problem in the economy will show up, because I think I don't see how where new jobs will be created, and where um, like even like us, right? As in, after doing this work from home, now I'm questioning: do we really need all the infra that we have in terms of rental, and in terms of as many people? Do we need to really go out and hire more people? We are not planning to ask anyone to leave, or we are not cutting anyone's salary, but I don't think we're really hiring anymore, because the realization has been that we have more than enough number of people to do what we have to do. And all my friends in Bombay, they're all thinking alike. I mean, they're all like, I'm in BKC paying 500 rupees a square feet. I mean, why why pay this rent if I can actually get as much work or more done sitting work from home? So yes, I'm unfortunately I'm extremely bearish of the world right now. Um, and I mean, I hope something changes, but I think the next 1-2 years are going to be tough.
I've been trying to follow who all are asking and going to Nirmala Sitharaman, asking the finance minister for help. And genuinely, most of them require help. So right from the fishermen to the export industry to the retail to the government. to the milk. So how do you think that is going to play in like short run, both from a Indian economy perspective, your own business, and maybe a bit of a touch on the business model? I think you've already touched that, but if you can summarize, what does it mean for that? And you can take it like in step by.
Oh, yeah, sure, sure. See, the thing is, uh, so people when they come to the stock markets, right? There are multiple classes of people. The first are the investors, right? As in most people who are probably listening to this, which is they buy stocks, they hold stocks in their demat, and then whenever the opportunity comes, they sell it, right? And which is called equity investing. Now, here's the funny thing. I mean, like my dad also never believed this. Only 0.5% of exchange turnover comes from this class of people, right? Which is, so if you actually look at exchange turnover, only 0.5% of all exchange turnover in a day comes from people who actually invest in equities. The rest, 99.5% of the people of the turnover is actually coming from people who are speculating, right? Yeah, either, I mean, speculating, doing arbitrage trades, or doing hedge trades. Futures and options is a really big, contributor of trading volumes on the exchange. Almost 80 to 85% of all exchange turnover today comes from futures and options. Now the thing is, equity investing, even though it's 0.5% of the exchange turnover, almost 95 to 97% of people only do equity investing. So most people, when you talk around us, they would have never done anything outside equity investing. So trading, which is this active speculating, active day trading, arbitrage, hedged, F&O trading, all of this is probably coming from 2-3% of the active stock market population, but they are contributing almost 99.5% of the trading volumes, right? So the business that we have today as Zerodha, there are, as I said, we have, when we started the business until 2015, it was all focused around this active speculator crowd, because that's how I've, I mean, that's what I am. I was trying to build the business for me, but then 15 onwards, we also, with the new products that we launched, we going zero brokerage on equity investing, etc. So we also got this huge class of equity investor crowd. I'm guessing if anyone, most people who have accounts with us who are listening here, are probably just doing equity investing, and we don't charge them any commission. So a lot of people assume that there is no, what's the revenue model, right? So we charge 20 rupees per trade for the active speculators, people who buy and sell in futures and options and etc. And the crazy bit here is that we do between 5 to 7 million trades a day. Even though a lot of it is non-revenue yielding because of equity investors, we also make $20 a trade on a lot of trades, right? So that's the business model. So as long as how stockbrokers typically make money is, as long as there is volatility, people are buying and selling, right? So volatility is good for broking businesses, but it's bad when there is no volatility. Like for example, 2008, even though most, like in the financial crisis and everyone lost money, but brokers actually made money in 2008 because of the volatility. The trading volume shot up and all of that, right? So even now, for the last 1 month, if you actually go back and if you speak to all brokers, they would have made money. But the problem for broking communities, usually after bouts of volatility, there is inactivity in the markets. So for stockbroking community, 2008 was good, early 2009 was good, but then 2010, 11, 12 was dead, as in the activity completely died down. Trading volumes dropped, and a lot of those things happened. So I mean, I think the way we are looking at it is that in this first few months, we will, volatility is going to be there, so we'll have trading volumes, but slowly the activity is going to die down. Then there'll be 1-2 years of inactivity of sorts, like where trading activity completely dies down. That's when businesses like us have a problem, because there is no volatility, no trades happen, there's no trades, there's no revenue generated. Right? So that's primarily our business model, which is, we make 20 rupees a trade from all the active traders in the market. Now, coming back to your question on the economy, see, the thing is, like, unfortunately, I don't think our finance minister has too much of leeway, right? As in, where I mean, where is the money, right? As in, so I mean, if they have to put back the money in the economy, as in they need uh, money from somewhere. So like, see, and I mean, this whole experience of the last 1 month. I know it's a very political thing to say, but I think this whole universal basic income, etc. I mean, that's the only real way out. I think, because how do you, everyone, if all the businesses keep automating, and then the processes improve, as in you don't need as many people anymore. So like things like lift operator, I mean, like a lot of those kind of jobs are there in India, where which can be easily removed without just the process is becoming efficient. So what I am really concerned about is actually the job losses and how what will create new jobs. And I have no idea. I mean, I don't even know if finance minister really has an option. Um, so yeah, so I'm kind of clueless about what potentially can be done here to solve this problem.
Uh, yeah, very tightrope, right? And her own budget, she was looking to think that the fiscal deficit will move up. That was based on two sellings, big sellings,
Right,
both
right,
the LIC and this thing. That's not going to happen.
absolutely.
Or you have to sell it for peanuts. So you're not going to do that.
Right,
Then, and on the top of it, and nearly most people, even IMF, is saying that uh, forget fiscal deficit, right? But somebody will have to bear the cost of interest at some point. So I really think that I wouldn't envy the position.
right,
Uh, I didn't take that role, but yeah, I don't envy the position. Yeah, absolutely, job losses and the credit market. So one question I must say, I picked up a little bit from my own colleagues. There's something which they said how your organization has evolved from what it thought and etc. There was a couple of people who use the same word, resilient,
mhm.
and I think there is a need for it. Can I just ask you what kind of DNA do you think you have
Right,
for the resilient word? And
right,
I think I want to use that back both for people who are listening, because
right,
many of them will be in fintech, etc. That
right,
word will be both personal and
right.
the organization. So would love to
Yeah,
hear your
yeah.
thoughts about it.
No, no. See, the thing is, I've been a trader through my life, right? And trading is almost like being on a roller coaster every day. So you it's just like an emotional roller coaster. And one of the ways I've done okay in my life has been from the time. I mean, I've said this before, but I think from the time I usually, before doing anything, I make peace with the maximum worst possible outcome. So, and I go ahead and do it only if I'm okay with it, right? So, uh, and I'm extremely peaceful after that. In the sense, once, like, if I'm, say, putting X money into something, and I'm starting off thinking that X money is gonna become zero, and then after that, everything else seems like a bonus. So a lot of people who know me personally, even when we are going through really tough times, and I'm usually generally happy, and I mean, I'm not stressed about anything. So and I think it kind of goes, it kind of, I'm because I'm at the top of this food cycle in our business. I think a lot of people in the business are almost like me today, which is, uh, you know, uh, you know, they're not looking at adversity, you know, being stressed and all of that. We're actually looking at everything as an opportunity. And also in terms of, I think this whole trading for so many years before Zerodha has just made me, like I've gone bust twice in my life, and and the last time I did, like I had to work 16-hour days for like 3 years, because I'd taken borrowed money in the market and I was trading the market. So when I went bust, I didn't go to zero. I actually went minus something. So I've done all kind of odd jobs. I worked in a call center. I was day trading. I was doing all of that to recover. So and the realization at the end of those 3 years was, dude, I've actually seen, and I think all of those experiences is what's made me resilient personally. And as a business, see, one of the things that I get a lot of credit for is that we've built Zerodha uh, without raising any external capital, right? So which is um, so when we started the business, I needed money, but like I said, right, 2010, 11, 12 was probably the worst time to go out and raise money for a broking business, because it was, and I myself didn't come from any pedigree background. I mean, I barely managed to go to a college. And, I look at my first presentation that I had made for Zerodha. I don't think if I was a VC, I would have funded a person like me. So, uh, you know, so, so yeah, so when we started the business, we didn't, uh, I mean, I didn't get any money. By by the time I started making money, uh, we have not done any advertising. So until date, so we are 2 million customers. We are largest brokers in India. Uh, we have done all of this without spending a single rupee on marketing and advertisement and any of that. So when we started doing okay, and people came and wrote, said, why don't you raise money? And I was like, I don't know what I'll do with the money, because we had started, as a business, we were profitable, and unless we had to spend on marketing and advertisement, uh, there was no real need of going out and raising any money. Uh, and then as we grew bigger, so we started an incubator called Rain Matter, which is where we invest into fintech startups. So it was essentially all these moonshots that we wanted to take as Zerodha, and which we couldn't take because as a business, I don't want to do anything outside broking. My idea is uh, we want to build the best execution platform and the best education platform for people who intend to buy or sell stocks, who want to learn about trading and investing. So so you know outside this, we started investing, saying, all these moonshots that can potentially grow the capital market ecosystem, we'll do it through Rain Matter. Uh, and then, once we invested, I started to get to know, VCs and all of that, through these companies. And and then the last 2 3 years, we've been getting ridiculous. Like, people have been kind of, when you say no to someone, they want you even more. So it's almost like being that girl who never dates anyone in the college, right? As in, so just because you said no, everyone wants to date you, right? So I think for personally for me, over the last 2 3 years, just because I say no to everyone, everyone like, and I need a way to find a way, find a way to invest into Zerodha. So, but yeah, I think the tougher thing has been to say no in the last 2 3 years, because these have been ridiculous amounts of money, and saying no to that is not very easy. And but I think the realization has been that the edge that Zerodha has over our competition today is the fact that we are bootstrapped, right? Because decision making is faster, and like like Murdoch had said, I think today's businesses, it's about fast beating the slow and not big beating small anymore, right? And for us, I think as we have grown bigger, we have only become faster. We have not become slower, right? So and that has been possible because of this, the fact that we don't have any external investors. All decision making happens really, really fast. And so yeah, so I think for the outside world, when they look at us, they think we are resilient because of all of these things. How we've grown as a business without raising any capital. Two is, our business is extremely tough. I think stockbroking business, because see, in a day we are doing 7 million trades, and this happens in a 6.5 hour window. And we rely on different infra on which our business has been built, right? We are connected to the exchanges on lease lines. Exchange has a certain capacity, then our data center lease lines have a certain capacity, and all of that. So, and we can't afford a downtime. Like yesterday, for like 15 20 minutes, uh, new people couldn't log into our platform. There was an issue in the morning, and I mean, you're burnt on social media. I mean, like I almost, like every time it happens, I almost decide to go on top of the building and jump off it. So because no, like I said, right, this whole, it's not like e-commerce business. This, every time we are not working, it's a notional profit and loss for someone. And if it's profit, no one's gonna complain, right? But if there is a notional loss, we get hammered. And in a tech business, it's not really possible to run a business without a downtime. Everyone has it, from Facebook, Amazon, Google, etc. So, So yeah, so I mean, I think like, how do I get up today and after yesterday's debacle, go back and say, I need to do more for the customers, etc. Right? So I think that resilience is because of my trading experience. Because when you're trading, you have a loss. You have to just get up and go look at the next trade as the one that'll make you money. So you can't, you can't. You can't be dejected, you can't be, you can't turn pessimistic, etc. So I think that trading is in my DNA, because of which I think this whole keep trying to do, like, after the whole debacle yesterday, I don't know how many customers have cursed me on social media yesterday, but so in my, yesterday evening when I was sitting down, I was like, dude, what can we do better to please them? So I think yeah, it's like I said, maybe that's why people think we are resilient and all that.
Yeah, no, very nice. Thank you. Thank you so much. I think, the sentence which you said that as we become bigger, we become faster. I will retain this. It's a very good one. I just remember talking to Tom Punfi when in Monzo. And I remember he saying that I said, what is driving you? He said, if I can convince all my family members, and some are stubborn, to use Monzo and some are around 65, then I know I've done the trick.
Right.
And it somehow stuck to me as a principle as we kept on doing stuff. We kept on thinking that can I convince all my friends?
Right.
And of course, some of them were in Revolut, so it was difficult to move there. But we should then go back and say, use for 100 rupees if you don't like 100 pounds and you don't like it, move. So I will pick that. I will keep that sentence very well articulated about the very fact that as you grow bigger, you actually become faster. Yeah. So one of the questions which I think was to come a little later, but I'll bring it because you've brought this up. I think some of the people who have joined us, I feel that a lot of them, through my own individual meeting, are probably aspirants of a startup, work in a startup, or also have those ambitions. Uh, they might be going through a period of uncertainty. So I would have wanted to bring that question a little later. But what would you
Right.
say to them? They might be in a slightly different business or model.
Right.
Those who are about to start or in it, what do they need to do right now? What would you?
No, I mean, I see. I think the first most important thing is to say, do you have runway to go through the next 2 years without any revenue? Because uh, I think you need to, like I said, personally, I would look at the worst possible outcome and try to make peace with it. And I think even saying 2 years is probably not the worst possible outcome, but I think right now everyone should just sit down and say, dude, next 2 years, I don't think our businesses are going anywhere. So can we survive, sustain, and come through this after 2 years? Um, One is that. I mean, two. I mean, more fundamental, which I think personally that's helped me, which I think is important for most founders, is it's important to remain optimist, right, in times like this. When I say optimist, I think it starts from within. It's tough, but I've been trying to get myself a workout every day, eat healthy food, because the what you do, what you eat, kind of makes you feel that way as well. So I think this whole work from home and all this barrage of negative news all the time from everywhere, right? It's very easy to kind of just turn pessimistic, and as founders, I don't think we can, you know, I mean, because people are looking up, our teams are looking up to us, so it's important to kind of lead from the front as such. So I think, um, because the reason I'm saying this is I've been interacting with some of my friends. People are just eating. I mean, they're just turning unhealthy. Sitting in the house, not just mentally, physically. All together. So I think it's important to not kind of stay as far away from that zone as possible. Uh, yeah. So in terms of business, as I said, I think 2 years is a given. Now, I think the world after Corona is going to be very different than the world now, and it's important that I think all the founders kind of keep an eye open for those opportunities. One of the big problems, not just in businesses, but also in trading the markets. Right? Trading the markets and running a business, are very similar to each other. Is people get stuck in a bad trade, and they postpone the stop loss. In the sense, when you're in a bad trade, the best thing to do is to exit it. The earlier you exit it, the better it is. And so that's what we advise our customers when they're trading the markets. But that's exactly the same thing that holds good for founders as well. Because once you've put some money and you've lost some money in it, it's very tough to accept that loss, right? You then end up getting into the zone of throwing good money at bad money. Uh, but throwing good money at bad money, I mean, doesn't make it, doesn't solve the problem, right? So I think one of those things that we need to do right now is to sit down and think if this business really makes sense or not. Right? If because there are a lot of founders who are at it, who are not, you know, who are finding different ways to raise money just to survive. Now, if the last 2 3 years, if businesses haven't been able to take off in a very conducive kind of environment, it most likely won't in the next 2 years, right? And so I think it's important to kind of bite the bullet and say, do I really want to wait till I'm forced out of it? Can I sit down today and take that decision rationally, saying, it hasn't made sense till now, it hasn't made money till now. I don't really see how it will make money in the next 1 2 years, and I don't have the money to survive 2 years. So I rather just stop myself out right now than being forced to stop out. Because once you're stopped out, you then are in a position, if any new opportunities come by, to take it. Otherwise, what happens is when you're in a bad trade, right, you don't even look up at other good opportunities that come around you. So I think it's important, if people, um, people can take that decision without ego and all of that, and just be ready for newer opportunities.
I see the parallel. The quite well said. Actually, it goes very well with the next question. I think a lot. This does have a lot of our own community members asking this. I know that you don't have a magic wand, but in terms of saying both from how should the customers, especially customers who are investing, or in your own platform, what would be your suggestion? What should they do? Things like emergency fund, should they save, invest? How should they go about it? And I think that's been a thing which a lot of people have asked. So what would be your view on that?
No, I mean, see, the thing is, markets have fallen quite a bit, so there are opportunities, right? But I think the way people should look at stock market for now in the next 1 2 years is, if you think you don't need the liquidity right now, only then go and invest, right? As in, don't don't bring in money which, because I've seen some ridiculous things, like people borrowing money on personal loans to go buy stocks right now because it's fallen enough. I mean, it's fallen quite a bit, and then you can make a lot of money and all of that. I don't think it's as simple as that. Someone said that stock market's the toughest place to make easy money. In the sense, it seems so easy, but it's actually really, really tough. So in a bull market, of course, everyone seems like they're very sharp and smart, but this is not a bull market right now. Right? This is gonna be a bear market for the next 1 2 years. So yeah, so I think if firstly, the thing about stock market, it's very commonsensical. How in the markets is you invest only what you don't you can afford to lose of sorts. I mean, that's how I typically tell most people who are starting off, which is, if say you have ₹1,00,000, if you're okay losing 50,000 rupees to completely, then maybe go use that 50,000 rupees and invest in the markets, right? Because you have to come to the markets thinking that you potentially could lose all the money. Like if you look at, been so many stocks in the last 1 2 years which have lost 70 80 90%, right? And so you potentially could end up buying stocks which go down 70 80 90%. So firstly, if people have no experience, it has to be mutual funds. I mean, there's no point trying to get smart about investing directly. put most of the money that you can through mutual funds, diversified mutual funds. If you don't know what to select, then maybe just index mutual funds. And then use a little bit of money to do direct investing. Maybe like I said, only that piece which you can afford to lose. And I think this whole SIP is a really good way of investing. I mean, a lot of people have already sold this so much. Systematically investing every month, you get like a dollar cost averaging kind of a advantage over a long period of time. And this, if someone has not started, markets have fallen so much, so it might be a good time to also start doing SIPs. But I think uh, I, like this is a time where people have to keep most money away from stock markets. I don't think this is a time to try to get, you know, I don't know if it's the right thing for a broker to say, but I think it's a right time to. It's not a right time to be kind of investing just because it's fallen, because we don't really know what's the size of this problem. Right? In 2008, you knew what the problem was. After 2-3 months of 2008, once the financial crisis started, you kind of knew how potentially how big the crisis can be. Right? But here, what's happening with this corona is that we have no clue. I mean, I have no clue on how long this will last, and what all industries it's going to impact. How, I mean, there's no clue at all. So it's very tough without knowing the problem to kind of figure out how much the impact of it can be, right? So yeah, so I think it's a good time to just stay in as much as in cash, keep money in your bank account, as much as possible.
Yeah, I think Siddharth was one of the people who had asked a similar question. But one of the other questions, which is like, is this the bottom? Have we seen it? Is that's one of the other questions.
Yeah, I mean, like I said, right? We don't know the problem. I mean, see, the thing is, stock markets are going to fall. They're going to bounce back. I mean, they never do one way, right? It's never going to just keep falling, right? As in, it's fallen, say 30%. It might bounce back 10-15%. So it'll keep doing all those jigs. The problem I think today is that we don't know. Like I said, right? We don't know how big this problem is, and without knowing how big the problem is, you can't really call a bottom. I mean, of course, there'll be for every time a market falls, there will be a bounce back. That's how markets behave. But yeah, I think we'll have to wait and see. If this is really the bottom. I hope it is. But let's see.
Yeah, I do worry that before this incident itself, some skeletons from the closets were coming in, right, with Yes Bank, etc. A lot of them were getting unraveled. You wonder if more of them will come because we were trying to use capital to prevent some of these for good reasons, social reasons, like bank. So given this sort of a problem, given the scale of spending which government may have to do, you don't know what more skeletons will be created also beyond this. And I think that worries me as an economist and also as a risk person. A lot of those will have to be, and hence there are two or three, four moving parts. It's impossible to come up with a distribution if you have like three or four really different things moving about. So yeah, that's absolutely true. There's one question which I think it's Pratik could ask, is that do you see any financial models, like financial business models, changing in response to this COVID? Whether the gig economy, etc. Do you have any opinion about that side of the world?
No, I mean, like, no, I haven't really thought through it yet. I haven't really, like, I'm just tracking whatever is happening. We haven't really thought through, because for us as a business, right, the last 1 month has been chaotic. As in, it's like I don't even know how so we started work from home on the 11th of March, and it's just like every day stock markets are it's moving as much as it used to move in a month in a day's time, right? And it's just been extremely stressful. Every day the market opens and I'm just crossing my fingers, hoping the market closes as soon as possible. Because like I said, it's a very, like, we can't afford to have a single minute of downtime and all of that. So it's just been quite stressful. So I haven't really had the time to actually sit down and think of what newer kind of financial businesses will open up post whatever happens. Um, so yeah, I haven't really thought through it. So,
Yeah. Yeah, I think one thing I wanted to do was Sahil and Sneh, did you get any questions from the chat which you're
Yeah,
monitoring? Yeah, would you
so
like to pick this up? Yeah.
sure, sure. Nitin, one question which comes up very often is, do you think there are specific industries that benefit out of this? And what is your take for smaller clusters, be it MSMEs? Do you look at some specific industries that post-COVID should benefit?
yeah, no, I mean, see, the thing is, I like, unfortunately, crypto is illegal or whatever, right? But I think, uh, in a world like today, I think, in a country like India, I think crypto would have done well uh, if we all had access to invest into Bitcoin and etc. So uh, I have a feeling, uh, like the industry that we are in, the broking one, I think will do quite okay if if markets don't collapse, right? If market does okay, I think, because the new world, you're not going to make money in your bank account, right? As in, the interest rates have dropped quite a bit. So people will seek assets that are yielding higher than what your bank can give. So I think, investing, saving in alternate assets, or stock markets, etc. I think we'll do okay, because I don't really see how this whole interest rates will go up in any in the next 1-2 years, right? So yeah, if you're kind of saying that the interest rates will be lower, people will seek higher yielding assets. So yeah, so I think these are the two things very closely related to our business that uh, you know I mean, so we are actually working on a bunch of things ourselves. See, until now as a business, we've our focus has been execution and education. But what we have realized is that people also need help in managing money, which we haven't really uh, taken on as a business, as a problem to solve. Um, so we've started applying. We have already applied for an asset management license. So we will be an AMC. We have along with one of the startups, we are building a financial planning platform. Which is, I think people need help. Um, you know, just because today what's happening is, I think people who advise people on the finances have a vested interest in selling products that earn more, right? And it's a very conflicted kind of a relationship. The insurance, the guy who's selling you insurance makes money as commissions by selling you insurance. The guy who's selling you mutual fund earns a trail commission from your mutual fund investments. Right? So I think India needs one of those financial planners who can cover all aspects of a customer's financial planning, and do it without any conflict. Do it as a fees, and not by charge, and not through manufacturers. The big challenge in India has been to collect the fees itself. Right? Today, how do advisors, if I advise you, how do I collect money from you as an advisory fees? Right now, I think one of the things that worked really well in the US is this advisory ecosystem, and that is missing in India. Right? Advisors who charge a fixed fees on the AUM, and in the US, how it works is the broker uh, charges the fees on the AUM and collects the fees and gives it to the advisor. In India, such a business model isn't there today. So today in India, advisor has to go back to the customer and ask him for a fees. I mean, ask for the fees to be collected once a month or once a quarter or whatever. And 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 customers are, it's very tough to collect fees every month, every quarter from customers. So I think this whole e-mandates, e-nudge, this whole ecosystem of standing instructions that is being put into play right now will help build out this advisory ecosystem, right? Because if advisors had an easy way of collecting money, they would, you would see a lot of advisors in India. Today, there are hardly any advisors. I mean, of course, there are advisors for HNI customers, but HNI customers pay monies. The problem with retail is collecting advisory fees from them is tough. So we see an opportunity there, which is like somehow powering this, building out an advisory ecosystem in India, because we Indians aren't exposed to finance in our college, in our school, college, job, whatever, right? So we end up doing what our friends or family has done, right? So that's one of the reasons why I think most Indians have more exposure to gold, real estate, and all of that, because most people come out of college, as soon as they get their job, their aspirations are very similar to what their parents were, which is buy a property or buy some gold and etc. I mean, gold is reduced, but most of our, I keep talking to people in our offices, and they still aspire to own real estate, which today, with the kind of rental yields, it doesn't make sense to be owning real estate at that cost. So I think like this whole advisory ecosystem is something that, like, one, I think people will look for assets, yielding more than what the bank account can give, and two is this, you know I think this whole opportunity for advisory, like advisors to build out platforms to help customers is something that'll be like a big opportunity in India.
Sure, Nitin. So, as you pointed out, right, because of a generational change between multiple generations, the need has drastically changed, and asset class requirement has required for new products to emerge. But would your advice change for two different people of the same age? Someone, as you mentioned, right, who's really new to the markets, should he only do mutual funds as you mentioned earlier?
Right.
Or how would your advice change to a more nuanced investor during these times where they have seen their portfolio crash by 30%? As you
Right.
already mentioned, right, equities is what is very famous amongst Indian when they actually start investing.
Right. No, see, the thing is, I think, like, if you've seen like a lot of these robo advisory platforms around the world, see, one of the ways the robo advisory platform works, right, is that they ask you a bunch of questions, and then there is this one question they ask, which is, what will you do if the stock market falls tomorrow? Will you buy more? Will you sell? Or will you do nothing? Right? They're essentially their whole model of suggesting this portfolio is based on your answer to this one question. And like, I've done this for like 20, 25 years. And if you were to ask me this question, Nitin, what will you do tomorrow if markets fall? I have no freaking idea. I don't know what I'll do, right? Because you just, it's a very tough question to answer. So now, uh, so I personally think, this whole building this robo advisory businesses on top of questions which are probably not answered right in the first place is not right. So like so I think like I said, right now, if you pick up these two people, very similar profiles, uh, you might end up suggesting wrong portfolios to both of them based on, if you were to kind of build a portfolio just based on a Q&A. So I think this whole advisory thing requires a human element to it. So there has to be like a human advisor in between. The person. It's just that you need to make sure that human has no kind of conflicted kind of interest to sell something which makes him money. But yeah, but I think the way like I'm thinking of this advisory thing is that you need to involve human. You probably need to bring this whole generation of advisors who are in it, just helping people do financial planning and charging your fees on advisories. Uh, so yeah, so I mean, that's essentially how I'm looking at it. So yeah, it can't be one advice for multiple people. I don't think I don't think that really works. So,
Thank you, Nitin. Before we take anything further, thank you so much. I think, we just messaged you like a couple of days before, or maybe 3-4 days before. Thank you for like joining us,
cheers,
and
cheers,
and it's been a very good experience. This is the first time for us too. So thank you so much for joining.
cheers. Thanks,
Yeah,
thanks a
thank you.
lot.
The next person who joins will be Anshu.